Hello friends, welcome to Reshma's Commerce World. Today we are discussing about reconciliation of cost account and financial account. For the reconciliation, there is two set of book of accounts are there, reconciliation statement or memorandum of reconciliation account. Here we are discussing about only reconciliation statement. So first of all, we have to know about why should we have to make the reconciliation statement, like whether the profit is correct or we have to verify the profit is correct by cost account and financial account. We are comparing the profit whether it is true or not. Here first we can analyze the pro forma or format of reconciliation statement. Here first we have to write the profit as per cost account. So we have to write down the profit as per cost account. Then we have to consider some items whether we have to add some items. We have to add items of income included in financial account but not in the cost account, item of expense included in the cost account but it is not in the financial account, like that. So on the format we can see so many items we have to add, so many items we have to less. So there is one trick whether to whatever we have to add, whatever we have to less. Okay, that I will introduce. That trick I will introduce. We can check that one first. Here I have classified into three conditions for the reconciliation of cost account and the financial account. The cost account and financial account, the profit we will write. So here we are depending only one format, that is whatever the profit is there on cost account, that we have to write first. On that format so many conditions, only three conditions we have to follow. Those conditions, the first one is regarding the expense and income, the second one is regarding increase and decrease of changes, then third one is the condition regarding opening stock and closing stock. So the first condition is whatever comes under the debit side of the P&L, that is known as expenses. Whatever the expenses are recorded in the financial account but it is not shown in the cost account. So whatever the details they are given in the P&L debit side items, that we have to reduce or minus or less, because all expenses are going out from us, so we have to minus. The next is credit side of the P&L, that is known as income items. Whatever the income that is comes to us, right? So we have to add those items. So whatever the debit side, that is expense, that we have to minus. Whatever the income, that we have to add. Then condition second. The condition second is regarding the changes of details. That first we have to analyze the financial account details will be there or cost account details also will be there. Depends on financial account details whether the cost account detail or the amount is increase or decrease, that we have to evaluate or analyze first. If it is increase, we have to add. If it is reduced, when we compare to financial account, the cost account figure is decreased, we have to less the item. That what is the change, how much amount decrease, that amount only we have to minus. The changes only we have to add or less. Okay, the next condition is third condition, that is regarding the opening stock and closing stock. So we know the opening stock is just opposite of closing stock or closing stock is just opposite of opening stock. So the opening stock, the treatment of opening stock, whatever it is, it's opposite only the treatment of closing stock. So we know whatever increase we have to add, that case is applicable only for opening stock here. So if the opening stock is increased, we have to add. So closing stock is the opposite of opening stock, right? So if the opening stock is increasing, we have to add. So if the closing stock is increasing, we have to minus. Then opposite of opening stock, that is increase in opening stock we have added. So decrease in opening stock we have to minus. That's just opposite of opening stock. Then closing stock is opposite. So if the decrease in opening stock we have minus. So here if the reduce in closing stock we have to add. These three conditions you have to study. Then we can check one question. So here net profit as per financial book and cost book also they have given. Then some other details also they have given. So we can do the reconciliation. Then first they given the net profit as per financial book. We don't want to take net profit as per cost book, that we have to write down first. First we have to write down the profit as per cost book, that is here 66,760. That we have, there should be two columns, one outer column and one inner column. So we have to write down the profit of cost accounting at outer column. The next item is factory overhead under recovery in costing. Under recovery means it's decreasing, so we have to minus. Then the fourth one is administration overhead recovered in excess. Excess means increasing, that we have to add. So administration overhead excess, what is the amount? 4,250. That we have to write down on the inner column, 4,250. Okay. Then next one is what? Depreciation charge financial book, that is 3,660. Okay, on the financial accounting it's showing 3,660, but in cost accounting it's showing 3,950. So when we compare to financial account, cost accounting amount is high, so it is increasing. How much amount it has been increased? That is 3,950 minus 3,660, that is 290. So whatever the excess, that we have to add. Okay, 290 is the excess. So the depreciation excess, that is 290, we have to write down on inner column. Okay. The next one is interest received but not include in costing. That is a income. Income of the P&L we have to add. Whatever the income we have to add. Interest on investment. That means whatever we made the investment, that is interest received. That is also we have to add. Then next one is income tax paid. It is an expense, so we have to minus. Bank interest credited in financial account. The credits, whatever comes under credit side of the financial account, that is the income, that we have to add. Bank interest. Okay. So whatever the amount for bank interest received, that is 230. That also we have to write. The next one is store adjustment credited in financial book. What is comes under credit side? That is the income. The income we have to add. So the store adjustment credited, that we have to add. How much is the amount? That is 420. Then next item is depreciation and dividend paid, then loss due to thefts. These three items comes under the debit side of P&L, that is the expense. So no need to add. So these are the items we have to add. When then we will get 5,640. Then after that we have to add along with the profit as per cost accounting. Then total we will get 7,22,400. That is 72,400. Okay. Then we have to check whatever the items we have to list. The third point is factory overhead is under recorded. That is decrease, that we have to minus. So factory overhead under recovery. How much? 5,700. That also we have to minus. Then administration overhead was excess, we have added. Depreciation also increased, that we have added. Interest received, that also income, we have added. Income tax paid, it is an expense, or it comes under the debit side of the P&L. So we have to minus income tax paid. How much? We have to check. What is the amount? That is 600. Okay. The next is income tax provide, that we have wrote. Then depreciation on stock charged on financial account, that comes under the debit side of the P&L. So it is an expense, so we have to minus depreciation. What is the amount? That is 560. Okay, sorry, 860. Then next one is dividend paid. Dividend paid also comes under the debit side of the P&L. It's an expense, so we have to minus dividend paid. The amount is 1200. Okay, 1200. Then next last one is loss due to theft. Because of theft, some losses happen. That is a expense, or it is comes under the debit side of the P&L. So it is an expense. So we have to minus. How much is the amount? 260. So these items we have to minus. So 5700 plus 600 plus 860 plus 1200 plus 260 is 8620. So we have to minus. Then we will get 63,780. Whatever the last amount, it should be same as the profit as per financial book. Okay, so I hope that you could understood. So only three conditions you have to check whether the item is expense or income. Whether it is expense, we have to minus. If it is income, we have to add. Then whatever the increase in opening stock, that we have to add. Whatever the increase in closing stock, that we have to minus. Then whatever the increase is happening, that we have to add. Whatever the decrease is happening, that we have to minus. These three conditions only you have to study well. Then the problem will be easy for you. Then next problem we can discuss. Here they are given the loss as per cost account. So the simple only, we know whatever the item we have to add, whatever the item we have to less. But if it is came as net loss, so whatever the item we have to minus, that we have to add here. Whatever the item we have to add, that here we have to minus. That only the change. Just do opposite. So first of all, we have to write down the net losses as per cost account. That is 3,44,800 in outer column. Then second one, work overhead under recovered in cost account. Actually it is decreasing. So actually we have to minus. But here they given the net loss. So we have to do the opposite. That is we have to minus. But here we have to add. Then depreciation overcharge, that is increasing. So actually we have to add, but here we have to minus. That administration overhead is excess. That's actually we have to add, but here we have to minus. Then interest on investment, it is an income. So we have to add actually. But here they are given the loss. So just opposite we have to do. So we have to minus. Like that we have to do the treatment if it given the loss. So first of all we have to write down the net loss as per the cost account, that is 3,44,800. Okay, then whatever the reduce item, whatever we have to less, that here we have to add. See the under recovered, actually we have to minus, but here we have added. Goodwill written off, it is an expense, but here we have added. Income tax paid, that also an expense, but here we have added. Depreciation is an expense, actually we have to minus, but we have added. When we add these items, we got 4,56,540. Then along with that we have reduced so many items. See, those all items were actually we have to add, but here they given the net loss. Because of that, whatever we have to add, that we have minus or less. Okay, so that amount is 23,650. So we have to reduce the 23,650 from 4,56,540. So we will get the net loss as per financial account is 4,32,890. That's all. So the treatment of net loss as per cost account and the net profit as per financial account, the treatment is same. So I hope that you could understood. If there is any doubt, you can comment. Then at the same time, if you have any doubt on any other topic, you can comment. I will try to explain. Then is there any suggestion also, you can comment. Then If you like and understood my videos, you just like, comment and subscribe my channel. Thanks for your support also. Thank you.